Hey there, Barry Habib at MBD Highway. Let's talk about what's going on with the interest rate environment. We've seen mortgage rates go up quite a bit. So what drives that? It's driven by inflation. You've all heard that inflation's on the rise, and mortgage rates are going to be driven by inflation because if you're the recipient of those mortgage payments, it's a fixed payment over a long period of time. And as inflation rises, it means that the buying power that you'll have with that fixed payment will erode because you're getting a fixed amount. But meanwhile, it's costing you more money to buy the things that you used to be able to purchase with that amount. The only way you can protect yourself from that more rapid rate of erosion on your fixed payment is to increase the interest rates that you're receiving. And that's why I've seen mortgage rates go up as inflation goes up. Now, in walks the Fed, and what's the Fed trying to do? Well, believe it or not, by hiking rates, they're trying to help mortgage rates. By hiking rates, that means it's more expensive to borrow, and that slows down inflation. In addition to that, they're causing you to have an incentive to save. That means less inflation because inflation is just too many dollars chasing too few goods. And the supply chain should ease up by the end of the year a bit. And that means you probably have an alleviation of inflation on all fronts. This tells us that there's a really good chance that we should see some good news, and mortgage rates towards the end of this year should start to decline by a meaningful amount, certainly into next year. And then there's the recession. We're almost assuredly, if not already in a recession, headed for one. And historically, recessions lead to destruction of demand, which causes inflation to slow down or to move lower. And that causes mortgage rates to move lower. So the bottom line here is that while rates are high right now compared to where they were, there's some really good news on the horizon. And that means that there's opportunity. Because what that does mean is with less competition, this could be a great time to be purchasing. Because while you may have to purchase with a higher rate temporarily, could be your forever home, but it's not necessarily your forever loan. There's a very high probability that you'll be able to refinance into a much lower rate in the not too distant future. And your USA loan officer is someone who is keenly aware of market conditions, and they can help guide you through the process and the timing of the best loan to take out today, but also when to refinance that to a lower opportunity. Hope you have a wonderful day.